Good morning, Paul Georgie from Allendale. It's August 4th, 2011, Thursday morning. Well, what do we talk about first here today? I think the outside markets are probably the most dominating as far as what the grain markets might do here this morning. We've seen some profit taking in the grains overnight, and most of that's coming from outside influences. We got the dollar extremely strong as we speak, right near $1 higher this morning. It's got an outside day up so far today, caused by several different things. One started about 8 o'clock last night when Japanese banks intervened in the currency market. That started the dollar strength. And from that point, we've got great concern still about the EU, talk coming out of there about Spain and Italy and their debt situation, caused the euro currency to come under some pressure. And we've been doing everything here throughout the last 12 hours to support this dollar and cause traders to come out of short positions in the dollar, and that is carrying over into other commodities. We're seeing the crude oil near the $90 area now, bouncing around there. We've got the stock indexes under quite a bit of pressure here this morning again. So that, I think, is going to carry over and cause some could cause some further pressure in the grain markets here today. When we look at fundamentals, we've also got a little bit of negative news out here today. We've got weather forecasts that have got more rain in the forecast over the next 10 days. According to Drew Lerner, from World Weather Inc., he believes that we could see some very beneficial rains across the Midwest over the next several days. That could in turn help the crop and should be supportive to crop growth. However, talking to producers in the southern half of the Midwest, rain right now is be very thankful to get it, but in many cases it won't help pollination and it won't help increase the corn crop. Soybean crop could be very much improved because of some rain coming in here over the next several days. Yield has been a number one focus for the last week. Started out early in the week. Traders and analysts were putting out numbers in the 155, maybe 154 area. Yesterday, we've got yields coming out from analysts down as low as 150. So the crop has certainly deteriorated here over the last while. We might be a little bit overzealous in some of our estimates that our traders are putting out right now of what type of national yield in corn. The big number that we've got to wait for is the USDA number coming out next week on August 11th. That will be the number we'll work with for 30 days or so. So we're going to see what the USDA comes out with as far as estimate for national corn yield next Thursday morning, 7:30. So stay close to Allendale Research during that time. We did have export sales out today. Numbers there, wheat looking for 300 to 600, came in at 504. New crop corn trade was looking for anywhere from 200 to 500 on export sales, was 297, and new crop corn 400 to 700 came in the 461 area. So corn sales at the lower end of estimates. In soybeans, however, the old crop trade was expecting maybe a negative 200 to a plus 50. Came in as a negative 405 as far as sales go, with the new crop sales 1.09 million metric tons, so much bigger than what the trade was expecting. But a lot of that we knew was going to happen as they switched. 400,000, I think, was reported earlier or last week that was moved from new crop to or old crop to new crop. Product sales were good for soybeans. We sold more meal than expected, sold more oil than expected. So The bottom line is, where do we go here today in the grains? I think we'll see some pressure. We needed some relief from an overbought market. We should find support on any weakness, as weather conditions still are important to determining what kind of corn yield we've got, and looking at what the balance sheet might be for corn next week on August 11th. In the livestock trade, cutout values there kind of neutral in the beef. Choice down 26, select up 24. We haven't seen any cattle trade yet this week. Packers are holding out for higher prices there, as the heat certainly has slowed down the gain in the feedlot areas. Hogs is where the excitement was yesterday afternoon when the USDA released the pork cutout values. We were up $2.08 on the cutout value there, and a lot of that support is believed to come from export business. And if it's going to China, South Korea also took their pork tariff off for imports all the way till September, so we could see some of this pork going to South Korea. It's going to be a couple weeks till we get final numbers on the meat sales, but certainly looks like export businesses supported the product and supporting futures here this morning, as hog futures are higher, cattle futures are slightly lower as we speak. So stay tuned to Allendale Research. Also, get signed up for the Allendale Conference. That's coming up in January, but there's no better time to be thinking about a cool spot to go in Crystal Lake, Illinois, than when we're suffering through this heat here in July and August. So we wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.